Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 10th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. Steady selling pressure yet again here, right from the after hours reopen Sunday evening and into really pre-market trading here. 3 a.m. Central, this thing really started to fall off, and we are well through the midpoint of the previous session's range, which ended in a tail event here by the end of the day. But we've seen multiple buying opportunities, at least at the end of days, but they haven't really been significant rejections that have carried price higher. Instead, every rotation to the upside has been an opportunity for bears to defend and rotate this thing downward, as this market remains in a very clear, elongated downward price discovery phase where we're meeting prior support levels each and every time. Whether it's a short-term support level, the next one down, the next one down, or even working into the FOMC key level that has finally been filled since September 18th, this thing continues to reach each and every key level below, and the next one down here starts to really take you down very, very far. How far down are we going to go? If we're going to fail at 5,700, 5,700 is this level right there, big time level here. The next market structure level down would be right at the 5,400 level, and then below that you're looking somewhere in the 5,150 zone. So we still have quite a bit of downside that could be ahead. Early this week right now we're seeing clear selling pressure right out of the gate, and the only saving grace for the week here would be some sort of major strong low that could lead to a check mark continuation up on the week. Otherwise, every pullback could still continue to be a selling opportunity until proven otherwise. We've failed at market structure, so 5,800 is the market structure level, 6,200, 5,400, and then 5,000. So every 400 points. So to fail at 5,800 would start to open you up at least to the next major market structure level below a 5,400. So any pullback shy of that 5,800 level could still be a selling opportunity on a swing basis down the road. So still looking rather weak here as we enter the second week of March. Looking at the NQ, early selling pressure for the week as well, and keep in mind this week is inflation data week, so we have CPI data coming out on Wednesday, PPI data coming out on Thursday. Those are the two big headline items for the week. Nothing really of significance on a Monday from an economic calendar standpoint. Tuesday, JOLTS job openings will be the big ticket item there, but core CPI, CPI data coming out Wednesday, and PPI and core PPI initial jobless claims on Thursday. All right, selling pressure here out of the NQ, which suggests more downside at least to the September 18th FOMC key level to go ahead and fill that level 19,702. But we've mentioned before that this market is having trouble finding a strong low. It's not able to really see a great intraday low that leads to a swing low that can carry this market higher. Instead, every pullback continues to be a selling opportunity, and we continue to work our way lower in a very clear, steady fashion. But this next break, 700, will begin to open up quite a bit more downside that could be a bit more aggressive as well. Failure here at 19.7, and you start to open up the 18.3, 18.4 zone, and then below that you're at 17.5. So we have some big time support levels down below to go grab. Initially the thought was if we fail here at the 2,000 level, then you're going to open up perhaps another 1,000 to 2,000 points down, as low as 18 at the very least here. So very clear bearish price action right now. Any pullback remains a selling opportunity until proven otherwise. Can we get a strong low? Looking at crude oil, this one right now up 2/3%, and currently trading off of the 66 area of support, on the way down here I've been calling for 66 to 67 support to be tested, and then once we do test that zone, it could be a tremendous buying opportunity back to 72 and up across the way to 78 to 80. So we're looking at the initial modest bounce, but it's not a super strong low either. So not a very strong low, and we're still in a very clear bearish downtrend. Perhaps we can bounce, and this would definitely be the spot for it to bounce. Maybe we get one more low, so maybe we pull back and then we retest one more time and get in this zone. That could provide a tremendous buying opportunity, or a higher low, something like this. But we haven't really seen a strong low here either, although this is the yearly S3 pivot right there. That's the yearly S3 pivot, thus the signal. You also have the previous quarter's low. That's a heck of an area of confluence right there, below our 66 level. So while it doesn't look like the strongest low, it wouldn't surprise if it starts to develop into a decent low that leads to at least a return back towards 72, maybe even 73. But again, the downward trend still in effect until proven otherwise. But this is a great little initial bounce for crude. Looking at gold futures, this one's about break even right now, 29.13. This one's been stuck in a range for the last 4 sessions, now a developing 5th session. That is about as narrow as it gets for gold right now. We can quantify that as well. So if we come up here and make that 5 on the PivotBoss advanced ADR indicator here, 51% of ADR, 48.8 points. Normally it'd be somewhere around 92 points. And anytime you develop a narrow multi-day range here after a bounce within a trend, it can tend to be a tremendous continuation pattern, especially if you get a failed low. So that means if we drop down and reject the failed low, it could turn into a great continuation to the upside. So this uptrend remains intact. We are starting to see maybe some signs of rounding here. We knew that we'd be getting close by getting to 3,000. We've gotten very, very close to 3,000, but the trend still hasn't been broken. Now maybe, of course, it's slowed down a bit. It'll tend to slow down, build some juice, build some energy, and then work for a continuation. So big time potential breakout move. Could be somewhere between 90 and 115 points of range up ahead. Just call it 100 to 115. And that's in line with a lot of the moves we've seen here lately, where we've seen moves of about that much. At least 115, if not more. And we can just bring this back a little bit right there, and you can just see how every one of these has hit that 115 level and then some. So at the very least here, this 5-day move could open up a pretty significant 115 point breakout move, and that would be more than enough to get this thing to 3,000 as well. Looking at, let's take a look at the YM. Down 1% right now is the YM. Trending lower, continuing to see weakness. Big high range down days. G-squat sell days there as well. A lot of big down days. And all of these bullish looking days here were kind of fool's gold. Not really strong lows. Ending the day higher after early selling pressure, but still maintaining an overall downtrend and price discovery phase. We still have 42,000 here to go grab in the YM. 42,000 was the next support level down. If we failed at 43, the idea was we were likely dropping back to 42. Even if we dropped at 44, we were talking about that as well. 44 opens up 43 and 42. At which point, if we get somewhere in here, call it 41.5 to 42K, maybe we get a big rotation right back up and we stay within this larger developing range. Right? You have this big trading range right here. That range has been in effect since really that FOMC key level, September 18th here, expanding. Maybe it drops a little bit more, and can it get a rally here? Because if we fail at 42 and can't reestablish acceptance back above that level, now you're starting to work your way downward. Now you're starting to really break through 42 here and open up a drop that can take you back to 4,000, for example. Maybe it takes us even lower, 39,000, based off this larger key range right here. And we're coming into that key range low very soon. So that's the low right there. That's the zone. And ideally, bulls can defend this edge, because if not, things get very, very hairy very quickly for these markets. Looking at Bitcoin, down 4.5% right now. Down 4.5%. Another gap down. Doesn't matter if it's gapping up or down on a Sunday evening here. The end result is lower here lately. This market with a rounded top. This market retesting the 95 level here on these bounces here, but still maintaining acceptance below the level. And we're still not out of the weeds. This was a decent strong low that day. A lot of markets gave it back. This gap up was a gift, and it gave it all back really quickly. It's just not really finding its rhythm right now. Do we need to retest this low? Do we need to get into 75K or this previous midpoint here? That's the previous year's mid, 73,750. Do we need to get into that zone? So still very, very clearly weak here, down another 4+%. But again, maybe we can get some play off of this strong low. That's a decent, strong enough low. Can we get a higher low? Can we get a lower low fade? One more flush and go. Because again, if not, like these markets, you start to fill and fail at 75, there's a shot to drop this thing all the way back to 50. So there's big time market structure implications coming at 75. Lastly, ETH down 1.64% right now, continuing to test the very important 2000 zone here. We got below it a couple of days ago. Today's low coming in at 1994s. Is that today's low as well? So is that a double bottom then? 1994 half, and this low, oh, that was 2004. So today was actually lower here as it takes out that previous low. Yeah, took out the previous week's low barely, and then has filled back into the previous session's close. Still a very bearish downtrend. That's something we've talked about here. We are in an optimum zone to bounce, but we're not seeing clear signs of rejection that would suggest a bounce. Even when we do move a little bit higher, it's been clearly sold off. So this market hanging on by a thread at 2000, because you start to fail at 2000, you open up 1600 as value, 1600 right here, the next key level, especially on 600 point market structure levels. 22 minus 6, 1600, that'd be the next major zone down, and that's a ways down there, especially percentage wise from the high. That'd be just a huge pullback compared to what BTC has seen. But again, perhaps these levels could provide a bit of a reactionary bounce soon. Alright, that is it for now. We'll see how this plays out here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.